So in this lesson, you're going to learn if it's going to be a continuation or a stop hunt. As you can see here, you have your swing. Once price crosses the swing, we're going to learn if price is going to continue within that direction and form a continuation or reverse and form a purge, which is your trap. And why this lesson is extremely important is a lot of traders get trapped in this situation. As you can see here, a liquidity is being built. And once price crosses that liquidity, a lot of traders get stuck. They don't know if it's going to be a continuation, which is a run, and price is going to continue within that direction, or price is going to reverse and trap them, forming a purge. The most important thing when it comes to figuring out if it's going to be a liquidity sweep or a liquidity run is your trend. You want to make sure you can see the trend, if the trend is bullish or if the trend is bearish. So a basic rule of thumb is if it's a uptrend, your swing high would be a liquidity run, not a sweep. Price will continue higher. Now, if it's a bull trend and your swing is your swing low that you're targeting, you are looking at a stop hunt, which is your liquidity sweep. Before you proceed, please make sure you like the video and leave a comment. This video is completely unmonetized. So let's take a look at this example. What do you see here? You see that price is making higher highs. For a clear look, as you can see, this was our swing high, swing low, swing high, and price reacted from our discount. So this is the beginning of a supply and demand cycle, supply and demand market structure cycle. So now let's mark our range. Let's mark our swings. And let's look for a stop hunt. Why are we looking for a stop hunt? Because price is bullish. If price is bullish, any swing low we're targeting would be a stop hunt unless the market will completely change. And even if the market does completely change, a lot of times price will pop back inside of the range. And I'll explain this in the next segment. So what do we have here? We have a reaction from our demand, right? And if you pull out your fib, you can see price is reacting from our lower demand. So what are we waiting for? We're waiting for a visit back because price is more than likely going to visit this area back before expanding to complete the supply and demand structure, just like the previous reaction. If you can see right here, price reacted from a extreme discount level to continue higher. So what are we going to do here? We're going to mark this level. And if price does get below this swing, what are we anticipating? If price gets below this swing, we're anticipating a stop hunt, price to trap sellers and continue with the macro cycle. And what happened here? You had your stop hunt. Why? Because price is bullish. As you can see, price is bullish. So we can continue this exact trend. We can continue swing high, swing low, and price is moving in a supply and demand market structure until we notice a change in profile. So now we have our stop hunt. Which high are we targeting? We are targeting this major high. Let's see. We had our return to origin and price broke structure. So what are we waiting for now? When price comes back inside of the range, let's see if price gets deeper. So now what are we waiting for? Let's clear this up. Where is our swing low? This is our swing low. And this is our swing high. So this is our current range. So we're waiting for, we're either waiting for a swing to form inside of here, or we're waiting for a major stop hunt, which would be price taking out this level. Price coming down here, taking out this level and continuing higher. And again, why are we doing this? Like I explained previously, because we're going along with the structure. We're going along with the market trend. So now what would you do here? A lot of traders try and sell into this situation. They think this is a breakout. They think this is a breakout or a run. They think price will continue lower. But we know in this case, since the market is bullish, price will more than likely stop hunt, trap these traders right here, trap the sellers, and continue with the initial structure that was formed right here. And don't worry, if you're still a little bit lost, we'll make it clear as we go in this lesson. As you can see what happened here. Price stop hunted. Price purged all the sellers. And will more than likely continue higher. So to wrap things up, the main thing here is you always want to follow the trend. So let's say price is bullish. If you're targeting your swing lows in a bullish trend, you can expect price to come down here, take this level out, and continue higher. And even if there is a change of character, so let's say this is a bullish cycle and you're anticipating next a bearish cycle based off a higher time frame inefficiency, right? Let's say that's the case. Even if that's the case, price will still come down here and still come back inside of the range to grab more internal liquidity to then completely change character. So targeting a swing low in a bullish trend as a stop hunt is a win-win. And let's try it out in a bearish market just to make it clear for you guys. So let's say this is a bearish trend. In a bearish trend, you're targeting swing highs for a stop hunt. Why are you targeting swing highs for a stop hunt? Because that's counter trend. And if price does get to this level, price will stop hunt and come back and continue the bearish trend. And again, even if that doesn't happen, we can always anticipate something like this. Always anticipate price to come out, still having to come back inside of the range to use internal liquidity to start a bullish cycle in case of a change of character. Looking at lower time frames, let's say you are in a bearish trend. Let's say you're in a bearish trend. So on the lower time frames, what you're looking for is, if you mark up your extremes, and let me show you the settings real quick. These are the settings. And I explained extreme levels multiple times before, but this is your premium and this is your discount. This is where selling the item would be cheap and this is where buying the item would be cheap. So knowing that, any swing here coming from your discount, you're looking for a run. But once price starts to get closer to your discounted level, to your premium level, excuse me, you're looking for a stop hunt. So let's say a swing right here and this swing gets taken. You're not expecting a continuation. That is not what you're expecting. You are now expecting a stop hunt and for price to continue lower. So let's take a look at this example. As you can see, the trend is bearish. Let's go on a 12-hour for a better view. And what can we see here? We can see that we had a swing high. Let's make it red. And we had a swing low. Price broke structure. So now we can go in a lower time frame and anticipate a retracement back to our extreme level. So again, like I said previously, when you're coming from the discounted level, which is your bottom corner, you are looking for runs. You're looking for continuation. You're looking for price to break structure and continue higher. Break structure and continue higher. But once price gets closer to this level, now you're starting to anticipate a stop hunt and for price to continue with the trend. Why is it the trend? Because the overall trend is bearish, as you can see, and you had a break of structure here on the current price range. So let's just mark these levels. So again, remember this, as long as price is coming from your discount, you're looking for runs, you're looking for a continuation. When price reaches your premium level, your top quarter, you're looking for a stop hunt. You can see you had a micro swing right here. So you're still anticipating price to go up. Now it could come back inside of the range to grab more liquidity to continue up, but the direction is up at least until here. And one way to trade these runs, which I'll make a separate lesson on, is to get in a continuation trade. So once price gets to this level, you are in a continuation trade. That'll be one way to trade it. And we'll have a whole lesson in how to figure everything out as far as your risk to reward and everything like that. So now price is coming back inside of the range. Now you have your swing right here. So you can anticipate price to still continue higher. And now what do you have here? You have a swing that's getting really close to your discounted level, to your premium level. So what are you waiting for once price gets to this level? You're waiting for a stop hunt, lock in, and for price to continue lower. Price is still not breaking this level. Let's pay attention. And you had your stop hunt. This was your stop hunt. Now all the buyers are trapped. And how would you enter this trade? Of course, I explained this multiple times as far as your lower time frame confirmation. You can go in a lower time frame and you could look for a range. So let's clear this, make it a little bit more clear. So what you're looking for is you're looking for a range to form and a range to be broken. So as you can see here, you had a swing low, swing high, and price came back down. So now you're targeting this level, but then price made another range and you could target this level, and at the end price made this range. So your entry would be right below your range, is right here. Your entry would be right here. You would enter when price gets below this level, and your stop loss would be right at that high or a little bit above, like I explained in previous lessons. Another way to trade this, but you will have a wider stop loss, you could look at previous resistance levels. So as you can see here, price found rejection right here. Let's make it black. And I explained this in the previous lesson, the one I did last week, as far as rejection level goes. As you can see here, this was a rejection level. Price was rejected right here. Price was rejected right here and rejected right here. So we know once price gets below this level, and completely breaks this level, you can enter the trade. Your stop loss right here. And where would your TP be? Your TP will be back down to the extreme. This is when you want to stretch your extreme. Hope you guys enjoyed this video. Make sure you like, share, and subscribe. And if you guys like the video, make sure you like the button. And if we reach 500 likes, I will make an advanced lesson about this topic.